Good morning, trading world. It is January 5th, 2022, 7:16 a.m., and this is my pre-market outlook. Today's title for the outlook is Batting for the Cycle, a baseball reference. And I just want to touch on something that's really important that a lot of people don't really take the time to think about or follow. Most people or most traders don't realize that cycling is an important part of trading. A lot of people don't really know or understand how important cycling is to a successful and profitable trading. There are many types of cycles. There's your secular, seasonal fluctuations, irregular or random fluctuations, and cyclic fluctuations. However, the one that I'm speaking of is much simpler. It's just indicator cycling. Watching and knowing your indicator. Knowing where you are in a cycle can help max out your profits. Right now, the 4-hour chart is the most important chart, and watching it cycle from overbought to oversold is the priority right now. It is key to keep up with how many smaller time frames cycles happen before the time frame that you're watching, like the 4-hour, make its full cycle. As an example, I was speaking to someone yesterday, and it just kind of came to my attention. Yesterday, I bought several 10 January 22 41 SPY puts. I did that around yesterday at 9:54 a.m. And the reason I took that position is at that time, the 4-hour chart was close to or coming out of a overbought cycle. And after a decent ride yesterday, I only took off one of those puts for okay profit. And the reason I left the others on is pretty much waiting for the 4-hour chart to cycle. There was times yesterday where I was watching the chart and you could see like little instances of a rally trying to get started, or a semblance of some type of small rally to get started intraday. But what I'd like to show you is that the reason I felt comfortable in keeping those on is waiting for the cycle. Okay, yesterday, looking at the RSI, we were near or approaching a overbought condition. Now, that's not the only reason that I took the trade. I can't go too deep into trade triggers, but I will explain. Conditions are not a trade trigger. It's not a reason for you to enter a trade, because overbought is a condition. And in this new age of trading, conditions can last much longer than you can stay solvent. So just because something's in an overbought condition, that's not a reason to actually enter a position. But once I entered the position, you look for a cycle. And the reason I took off the first is because we got through the halfway mark of the cycle. And usually at the halfway mark, I'll take profits, because generally this is where, if we're in a downtrend, we're going to have the semblance of a small rally or something to that nature, where we go back and retest, especially if it's intraday, we may go back and retest the resistance of the day or the high of the day, or whatever the case may be. And it's usually also a chance to re-enter the position as well. But this is the part of the cycling that I'm waiting to play out. And in addition to the RSI telling me that we've reached a halfway point, the other thing that I look at is the stochastic. And at this point, the stochastic is telling me we're still in the middle of the range. And I'm looking for the 4-hour chart to get us to a point near the bottom of the range before exiting the positions. So a lot of times people will take a position and they'll get shaken out of it, because at this point, when we reach the halfway mark, we usually get this semblance of a rally where on the chart we're pulling back to go retest the high of the day. And we did try to go back and retest it, but as you can see, overnight we continued down. So that sets us up for a specific day structure, being that this is an expiration day. We'll get into the trend day structure, specifically a downtrend day. All right, let's move on to the key levels of the day. All right, the key levels of the day to watch, starting with resistance, is going to be 476. That's going to be the Jack resistance. Queen resistance is going to be 477, and King resistance is going to be 478 through 480. On the support side, the Jack support is going to be 475. The Queen support is going to be 474 through 473. And King support is going to be 472. The Queen support is going to play a major role today. That's where I'm looking for us to probably end up at some point today. Like I said earlier, this morning is setting up for what's basically a trend down day type structure. And this day type can be among your most profitable days if you're on the right side of the trend. It can also be one of the biggest losing days if you try to fight the trend. This day type gives you great entry by starting with a semi-rally back to a specific resistance level, which is usually near the previous close. One of the main ways that we can tell a trend day, and even more specifically a downtrend day, is yesterday's close. Yesterday's close was 477.55, which we're going to mark as being somewhere up here. We're marking the blue line as the previous close. So one of the key identifying features of a trend day is that we'll usually start with a gap, and it's usually a gap on a trend down day. We'll start gap down, which is, as you can see, we do have a a gap, and usually during the first 15 minutes or so of the opening trading day, we'll start off trying to fill this gap back up to 477.55. But on a trend down day, we're going to run into some resistance, usually before or at some point before we get to fill or completely fill the gap at 477. And we'll get just a little bit of a notion. Sometimes you don't, but you'll get a little bit of a sideways move, and bam, we start on this trend for the first half of the day. And this trend, if you take advantage of that for just that hour between maybe 10 and 11 o'clock, it should be sufficient to make your daily goal, if not more. So this is the part of the trend day that I usually concentrate on, is this this move here during the first part of the day. The next part of the day, with a lot of days, is you see the lunchtime chop, which will usually a sideways move, and it's usually nothing to write home about. I usually ignore it. I don't do much trading. In fact, most of the time, most of my trading days are over by 11 or 12, unless it's a highly volatile day. And then from this point, the trend day has two models. It could pretty much branch off, and I call this the normal trend day, where we get a head fake and then another just small fade back into the close. That's the normal trend day. And then we have what I like to call the change day, or rounded reversal day. And it can be identified as, usually in the morning, there's not much of a pullback here toward the resistance. But the other identifying feature about this is, usually from the first 15 minutes into the day, whatever you're watching, whether it's internals, whether it's indicators, there's usually a divergence going on from the moment you enter the first 15 minutes of the day. You can see it through volume, you can see it through indicators, you can see it through internals. But as we're moving here, your indicator, or whatever it is you're watching, is diverging, and you're going to have a slight, if we're in a downtrend day like today, instead of the indicator following or converging with price action, it'll actually be diverging, going against it. And that kind of lets you know that at some point later in the day, depending how strong or how big that divergence is, you're probably going to get a move like this in the second half of the day. So that's somewhat the anatomy of a trend day, or what we're looking for today. That is a primary and most probable situation for today. However, we do have an alternate thesis, which would put us in much more of a range day type scenario. And the range day would pretty much put us in a situation where we get above yesterday's close and a pullback and another try, and there are many different variations to a range day. With that being said, it could continue down first. So there are many different variations. of a range day. But the key identifier to a range day is that we usually establish some type of a high and low for the day and bounce in between those. So that's the usual. And like I said, there are many variations to a range day. We can have a range day that can have a bullish bias to it, and that's usually where we push whatever high that's established in the early part of the day. We'll push the boundaries on that and go higher, and we'll chop back below and then still try to push that boundary even higher, and then vice versa for a bearish biased range day. So that's pretty much it for today. As always, define and know your risk, and profit will come. Wishing you a profitable trading day, and I apologize for my voice because it really does sound and feel like I'm coming down with something. But one of the benefits of trading, I can sit here in solitude at my desk and pretty much don't have to be bothered or don't have to go around many people. So again, wishing you a profitable trading day. Hope you have a great one. See you next time.